Hey, so thank you so much. I wanted to focus on the manic nature of our industry and really put it in a multi-decade perspective. A lot of people look at things in a really, really short term. When we launched our first funds, the entire market cap was $1 billion. And it seemed to me that it was the most compelling asymmetric risk reward trade I'd ever seen. It's up 3 orders of magnitude, and I still feel exactly the same way. I wouldn't want to invest in any other asset class at the moment. And I think we still have a couple decades of this to go. And so I talk to investors all the time, and I still hear people say, well, I guess I missed it. No, we're still in the beginning. The majority of institutions literally have zero exposure to this space. So it's really starting. It's a global phenomenon.
Alrighty, everybody, what is going on? Welcome back to another CyberX video breakdown. As you heard the CEO of Pantera Capital, Dan Morehead, go on to mention that the vast majority of financial institutions have 0% of assets under management allocated or just capital allocated to the digital asset ecosystem, and he would not want to invest in any other asset class. That is a huge statement from the Token 2049 event that took place May 2025. Considering the fact that Bitcoin just hit a brand new all-time high, we are set to experience such a massive ride in the digital asset ecosystem over the next consecutive couple years. Do not think that you have missed the train. So in today's video breakdown, I'm just going to show you guys undeniable proof that financial institutions are for a fact about to enter into this ecosystem and that you have not missed anything yet. And we are only just getting started. So if you enjoy these deep research dives, going over documented proof, showing you guys these panel discussions via institutional perspectives from some of the largest market participants in the game, do me a favor, smash that thumbs up button and subscribe. So I said to you guys here in this post, and this is going to allow us to full circle back at the end of this video breakdown to something that Dan Morehead said about billions of people, normal people seeing that this is obvious, right? This investment schematic is probably one of the easiest investments that anybody can make in their lifetime. So I said here, Bitcoin is casually trading at brand new all-time highs. XRP has traded above $2 for the longest time in its history. SUI went from 50 cents to $5.50. And we made a video breakdown last year on SUI when it was trading at about 50 cents for everybody to see. And 93% of the population still do not even own cryptocurrency yet. Do you see how easy this play was? And you can see this is a statistic that mentions that 93.2% of the population still do not own crypto, and only 6.8% of the global population owns crypto. Now, don't take that from me, right? Take that from an industry-leading expert at MasterCard tell you this just a month ago on stage from the Crypto Valley Summit.
What do we see then in terms of adoption? So where are we actually on our overall journey? Still nascent, no? 550 million globally in terms of crypto ownership is not humongous. 6.8% of the whole population. Switzerland is standing out here a little bit actually with their 11.5% adoption, probably driven also because of the population who is prone to invest, who probably have a little bit of a higher net value on their bank account than most of the people across the world. But again, 550 million is not humongous, but it's an emerging segment, and we have seen a 33% growth rate between 23 and 2024. So we're growing, and people actually get interested and are willing to enter the space. So I think it's good, but I think as an industry overall, we still have some work to do, no?
So that is taken from a MasterCard perspective, not just some influencer or Twitter dude on the internet, right? This is coming from a representative from MasterCard. You listening to this most likely, or a family member or a friend that is denying crypto's existence and that it's some scam, probably have a MasterCard in your wallet. That's going to play an important role when we get into another breaking development that took place this month in May. So to continue to show you guys that this is happening, let's head over here. I have this document. This document was put out by Broadridge, and it is titled The State of Transformation 2025 Digital Transformation and the Next Gen Technology Study. Now, do you guys remember what the CEO of Broadridge said just about 2.5 years ago, right after the FTX collapse took place, or a few months thereafter, where he specifically said in an interview that
where you and Broadridge, are you seeing the move to DLT-based platforms, okay?
Yeah, I think it is. You know, it's funny because with sort of the implosion of the crypto market last year, I think the general public is sort of thinking like, oh, well, this stuff is going away. And, you know, when you talk to people in the know in financial services, it's like, no, it's not going away. It's very real. You know, for us,
and this just goes kind of hand in hand with more proof that these institutions put out, that if you read in detail and you pay attention and block out the noise, you will see that crypto going away is the farthest thing from the truth. And everybody in the know does actually insist that they're going to not only continue to adapt and evolve to this digital asset ecosystem, but onboard into this space at a very rapid pace over the next consecutive couple of years. So there's only 2 segments of this that I really want to read for you guys. And the first one is who was interviewed in this survey. All right. So it says here, the 5th annual Broadridge Digital Transformation Next Gen Technology Study breaks down the sentiment, reflections, and actions of more than 500 financial services, technology, and operation leaders from around the world and across wealth management, capital markets, and asset management firms. Demystifying what guides each organization's transformation roadmap and explores their unique approach to data, AI, crypto, cybersecurity, personalization, and more. And so if we come right down here, it mentions that they had 509 total respondents here, where they stemmed from: North America, Europe, and the APAC regions. And altogether, they had about $83 billion of assets under management. The average person surveyed, or the average institution surveyed, had an average of $83 billion of assets under management, not total, but on average, each firm. All right. That's pretty huge. Okay. So if you just do that math, what's 509 times 83 billion? If you just take that as their minimum, that's a lot of freaking money that was surveyed in this report. Just to give you a perspective, considering what Dan Morehead said about how the vast majority of financial institutions have 0% allocated to this space. Okay, that's important in today's video breakdown. So if we continue to scroll down here, the second part of this document I want to take your attention to is where it goes on to talk about the digital assets and how they're about to go mainstream. Keep in mind, this document is from 2025, and it says, after many years of sitting on the sidelines, that's important, that key vocabulary right there, digital assets and blockchain technologies have captured the attention and increasing the wallets of financial firms. Nearly 3/4, or 71% of financial firms, are making major investments in blockchain and distributed ledger technology this year, up from 59% in 2024, and 64% of the firms surveyed are making big investments in cryptocurrency. Do you see that? It doesn't say big investments in blockchain. It doesn't say big investments in DLT or tokenized real world assets. It says 64% are making big investments in cryptocurrency. That is a huge statement. All right. Now, if it come over here, it gives some other statistics. It says, for example, we are expecting greater regulation and governance of digital assets. 73% believe that to be the case. I believe that digital assets will be widely accessible as an asset class. 53% believe that to be the case. And digital assets are increasingly relevant for my business. 40% of them believe that to be the case. Last but not least, it says here, and this is a direct quote coming from a managing director and global head of operations at a large investment bank in the United States. If you put the smartest people in our industry in a room and ask them to draw everything away on what works today, and then you tell them to erase it all and redraw the way that it would work in the future, I guarantee that digital assets and blockchain would stay on the board. Do you all see that right there? This is a huge document, in my personal opinion, that just goes to show that institutional interest in digital assets and crypto is only continuing to scale. Back up here to where the document mentions, after many years of sitting on the sidelines, these financial firms, 64% of them are planning on making big investments into crypto. Okay. Well, if we come over here, I streamed a panel discussion where only 31 people were listening to this. And I was one of those 31 people, and I streamed it on X for you guys. This is Albert Cho from Galaxy the large investment firm, and listen to what this gentleman says. Albert Cho, I don't know what position he holds at Galaxy. It's a one of the leading positions, but listen to what he says about how institutions are not sitting sideline anymore, and they are now ready to enter into the space. Just take a second here and listen.
System, crypto is inevitably going to have to get intertwined into that. And so, to me, and I think we've touched on this point around sort of crypto innovation. I think we're at a stage where the industry has gotten to a great maturity level, but secondly, I don't think that's going to stifle innovation in any way. I think it's just going to happen in a little bit more of a structured and methodical way. We still see some of the larger financial institutions, the big banks, the large asset managers, et cetera, trying to participate into crypto. I would expect them to continue to build. But, as you think about their businesses more broadly, they're very large, complex organizations that are very intertwined into the regulatory environment. And so, this is one environment in a unique environment where we have a new administration that's supportive. We're going to hopefully in the next couple of months or into 2026 get a little bit more regulatory clarity, and then until that happens, we'll start to see a wave of large financial institutions start to participate in a more meaningful way. And so I think it's going to happen. I think it's just going to take time, and I think a lot of those institutions who have been sidelined for the past few years are planning to participate in a more meaningful way.
You heard that key vocabulary that he just mentioned. Institutions that were sidelined, right, are going to participate in a more meaningful way. This key vocabulary is important because these institutions, these firms, they all sit in on the same meetings. And it says here, after many years of sitting on the sidelines, digital assets, blockchain technologies have captured the attention of financial firms. This is just, it's more confirmation. Okay. Now, back to the post here where I said, do you see now how easy this play was? All right. Well, this kind of just reiterates what Dan Morehead says back here at the Token 2049 May 2025 event. Take a second here and just briefly listen to what Dan Morehead says about billions of people finally kind of like catching on and waking up and seeing how obvious this all was.
So many good things. Products that we've been working on for years and years and years are really finding fit now. And what I would say, so there's a couple stats on how blockchain is really, really taking off and actually being used. 250 million people are using a wallet every month. It's just seems inevitable that within 6-7 years, something like that, 2.5 billion people will be doing it. That's how many people share photos on Facebook. Financial inclusion seems more important. So I think that is going to happen. A really good example of product market fit, they just mentioned Solana on the previous panel. They had 3.2 billion in revenues, and they're trading at only 20-something times revenues. If a stock investor finds an incredible growth company that's trading at only 20-something times revenue, they're going to buy it. And so the fundamentals in blockchain are so obvious and so compelling that even normal investors are going to be coming into the space. So the opportunity, we see three main things.
So I just wanted you all to hear that, right? He mentioned that this is so obvious that even normal people are finally going to catch on and start to come into this space. So wake up and stop. I don't think that everybody that watches my YouTube or watches the content I make is a naysayer, but I'm sure that you all probably have people in your family who are naysayers and think that it's crazy that you are investing in this space or watching some guy's YouTube that talks about cryptocurrency all the time. So share these types of video breakdowns with them and wake them up. Allow them to see that this is not some, immature asset class anymore like it used to be 2, 3, 4, even 5 years ago, and that it has matured significantly since then. And it is for a fact being integrated into the financial system. And if they don't participate, they risk falling behind significantly, not only in terms of what they can achieve in terms of financial appreciation, but just in terms of technological innovation. So to continue to hit it on the head and show you guys that this is happening, this is Regulon P. He had former experience at a major bank and a family office, and he was also the VP for Asia Pacific and the CEO of Circle in Singapore. All right. Pay attention to what this gentleman says. He specifically talks about how everything is about the come on chain. And he talks about how, kids nowadays are not going to know what it's like to have an average bank account. And that's going to go hand in hand with the last fundamental piece that I have to share with you guys today, something that just took place this month in May, and that is going to continue to proliferate over the next consecutive couple of years. Take a second and listen to what this gentleman here says.
These, right? Because my favorite saying is banking is fun, and it pretty much is. And so, so they're looking at the people previously who are saying, oh, you've got a shit experience now, we've got a better experience. And I'm looking at Revolut and Wise going, oh my God, that's a shit experience. Imagine what an on-chain bank will look like. And anyone who's got like young kids, a few years old, 2 or 3 years old, imagine in 15 years when they're like 18 years old, when like maybe 20 or 30% of the economy is stable coins. They're going to come into a world where they may never have a normal bank, right? And the normal banks have lots of terrible restrictions, right? They tell you who you can send money to. They tell you who can sign up. They lock your funds. Then you got to call customer service, explain why you sent money to a crypto exchange. There's all this rubbish that comes. And then it depends on where your passport is, where your residency is. Just like infinite amount of bullshit that's been created just because of country-based regulations. But there is a new, better world where you've got this pristine on-chain bank, which doesn't depend on your passport, doesn't depend on your residency. And it will appear in the next 10 years, where you can do all the things you can do with a bank, which include having a cash account, a savings account, the equivalent of a card, which will be done as an on-chain payment with maybe something like a card, but it'll be done on-chain instead of via Visa or MasterCard. And then all the other things like stocks are going to be on-chain, crypto's already on-chain, there'll be lending on-chain, everything, right? And so I would dare say that most people, kids that are 2 to 3 years old now, will come straight into an on-chain bank world, which is probably very hard to imagine for us. But I can almost guarantee that half of them will and won't have, and they'll be paid natively in stablecoins, and they'll never really care about what the old world looked like. And guess what? They're also trading and giving money to people all over the world who are operating.
So I'm going to pause it there because he's kind of delivering in my personal opinion, unrealistic long-term target. I mean, yes, what he's saying is going to come into fruition, but it's already happening, right? This payment infrastructure being integrated with stablecoins and payment providers right now, it's already taking place. What this gentleman just mentioned isn't going to happen for another 5 to 10 years. It's happening right now. So I want to take your attention over here to a breaking development from MoonPay that just took place. And you can see this is a mainstream platform, CNBC, where the everyday average person watches this every single day. But now it's starting to be drip fed into the mainstream, which is crazy to see because the mainstream, in previous years only painted a very bad picture for crypto. But now you can see individual representatives from CNBC interviewing other individual representatives on the crypto native side of things, letting the world know that crypto is going to be replacing your bank account. So literally this MoonPay post says, your crypto wallet will replace your bank account. That is not a prediction. It is a promise. And this is already happening, as I mentioned. So the gentleman that I just showed you guys a video of projecting this out 5 to 10 years from now and how, kids are not going to know what a bank account is going to look like. This is already taking place. The foundation here is being built out and it is already accessible in the moment now. Take a second here and listen to this.
Now teaming up with crypto startup MoonPay to enable stable coin payments with MasterCard cards. This is a huge development in the world of stable coins. Join us right now. First on CNBC from Toronto is MoonPay's founder and CEO, Ivan Soto-Wright. Good morning to you. Just because some folks may not understand what this all means, break down the technology here. So MasterCard, well, I won't even do it. You do it, Ivan.
Awesome. Well, thanks for having me again. It's great to be back on the show. From our perspective, we think stablecoins are a really big deal. It's actually quite personal for me. I'm half Venezuelan, and there are people all around the world that receive money from the United States. This is a new technology layer. Stablecoins are dollars on a blockchain. Anyone with an internet connection, anyone with a phone can receive money in the form of the US dollar at the speed of light, the speed of the internet. And from our perspective, we want to see this embedded everywhere. The next logical step for us was, okay, there's 120 million unique wallet addresses that have stablecoins, 30 million active users. How do we make that possible for them to spend those stablecoins? Logical next step was with MasterCard. They've been a phenomenal partner. We've been working with them over the past couple of years. Shout out to Michael and Sherry, the president over at MasterCard, to bring this to life. but we want to make this more accessible. MoonPay has been about building the backwards compatibility of the existing financial system. So this made a lot of sense.
I want you to sort of project out what the financial future looks like, because I sometimes don't think that the audience and all of us totally understand where this all goes, because it feels to me, once you get to a point where a MasterCard or the Visa network and everybody is in stablecoin land, actually sort of finance actually fundamentally changes.
For sure. I think cryptocurrency wallets are going to be embedded everywhere. It's ultimately a new internet native technology. If you think about the legacy system, we had all these financial systems in different parts of the world that didn't communicate with each other in a shared language. Blockchains are that shared language. Stablecoins sit on top of them. And so we think it's going to be a natural next step that every single financial institution recognizes its importance. And so that was part of the reason last time I came on the show, we acquired Iron, which was a developer platform to bring APIs, bring really simple to easy to use infrastructure for any business to embed stablecoins.
Okay, so I'm just going to pause it right there. Do you all hear the rhetoric from CNBC? It's like they make fun of the average person that watches mainstream news. He was like, oh, I just think the viewers and the people watching, we don't know what the heck you're talking about. So can you break it down? And it's the truth. And you have to understand that that is all changing now, where back to what Dan Morehead said, the average everyday person is going to see how obvious this is. And they're going to start to embed themselves into this crypto native ecosystem, whether that's through stable coins, other digital assets, other means of investing, so on and so forth. We are at the forefront of a huge transformation, a massive wealth transfer. And you do not want to be sidelined after these institutions come in because you were skeptical, because you were fearful, because you were uneducated. So do yourself a favor. Tap into a community of like-minded individuals like ours here at CyberX. You can always tap into any of this research. We have hundreds of hours of non-mainstream documented research in our private CyberX Discord. We would love to have you on the team. We host Zoom calls all throughout the week, fundamental reports, breaking down the cryptocurrency ecosystem and the fluctuations and prices and everything like that. Come tap in with us. We'd love to keep you up to date and in the loop of everything that's happening and going on. You can head over to cyberxtrading.com if you want to tap in with us. And if not, just follow the free stuff. Follow me over on X, smash that thumbs up button and subscribe to the YouTube channel. Stay up to date with the information. With that being said, hopefully you all enjoyed. As always, many blessings, and I'll see you guys in the next video breakdown.